let's look at Ethereum / the US dollar. So first off, read this disclaimer carefully. Then do your good deed of today by liking and subscribing. Okay, so Ethereum is 88% from the 52-week low, and it is at the highs. So let's go into the charts. So ETH, US dollar. So let's go to Coinbase. Weekly data points. So it gives us the long-term picture. So Ethereum has seen a big move here. We are at a breakout now. We also see some time cycles, but the time cycles have differed in duration. So here you had more consistent time cycles. Here, I mean, you could potentially argue that this move here was the low of that time cycle. It's possible. It's the time cycles. They do suggest that there might be more left in the rally, but they have sort of changed a bit now. So I don't think they are super reliable. If you look at this previous breakout here, so vis-a-vis this high, this breakout here was like 5% and then a bit of a pullback. The current breakout is at 1.6%. So based on the previous breakout, which was a bit more tepid, we didn't see that much from Ethereum. So the big question about the current breakout is, okay, how big is it going to be? Here are the dailies, pretty strong move. So it begs the question, okay, are we overbought or not? So looking at the RSI here, we are at the same level that created problems last time. But we're not like at any kind of extreme level either. MACD sent a buy signal here. The PPOs, which measures the distance between price and various moving averages, are not too bad. Yeah, looking here at the daily data points. Buy signal from the MACD. Accumulation distribution is bullish. RSI is elevated along with the PPOs, but we don't have like extreme readings. The tricky thing now about Ethereum is that we have a move in development. So like, okay, what should you do now? So if you don't have any kind of position, one could of course buy, but this isn't like an ideal time to buy. I mean, you have missed out on a pretty significant move. And there's a risk, when it comes to buying high as well. So if you don't have any kind of position, I would potentially look for some bearish opportunities, but they are not here yet. That's the issue. If you have an existing bullish position, like based on the recent history, if we go back here, and also here, I think it is pretty prudent to consider to tighten some stops, lock in some profits, given that it recently has disappointed investors. Like if you were here you have 77% almost, and then you are back to like less than half. That isn't fun. Same thing with the here. Let's say that you nailed the low. Here you are at 86%. Here you are at a loss. So yeah, there's nothing, there's no alternative to like a stop loss level. So when it comes to the notes here, I do think that we have slight overbought, but it is very slight. Very, very, very slight. So as far as the bearish score here goes, I think I will give the bears a -1. They have a little bit of a point here, but it's not there yet. Then again, this isn't bullish either. So this is one of those interesting case studies where there's a big difference between having a position and not having a position and considering a position. From those two different perspectives, the same chart could be completely different. So here's the seasonality. So to the left here, we do see that there might be some bullish action into mid-December, but then there usually is a pretty substantial sharp give back into later December. Uh, when you look here at the seasonality, you do see that there are some bearish tendencies for December. The sell-off during the later part of December might frankly be due to also some tax reasons, where especially with cryptocurrencies, you might have a chunk of people who want to realize gains or losses to have a bit of a cleaner tax report. Okay, so the table view, I mean, it is a bit bearish in December, at least recently. So far, we are at a 5.2% gain, but there's been some big wins from December as well, so it's not clean seasonality at all. January and February are, however, very bullish. So I'm not entirely sure what is the reason behind this seasonality, but I do think that this taxation effect, where you have at least some of the bigger players who want to maybe make some moves, yeah, that could be a reason. Okay, so let's go back here to my notes. So when it comes to the seasonality, it is really just messy. So in this case, I do think I will give the bulls a 2, but that is simply because, as we saw, there is the expectation of some bullish action into mid-ish December, but then there's this give back, so there could be a little bit more push here in this rally, but not like huge. Fundamentals, I don't give any fundamental scores on the cryptos. So next we will go to relative performance, like that. And let's look at some correlations. So we will compare it against Bitcoin. Bitcoin, like that. So if you want to get exposure to Ethereum without buying Ethereum itself, there are ETFs now. You have VanEck ETF Trust, VanEck Ethereum Strategy ETF, so ETH. So here are the long-term correlations. So there's a 75% positive correlation with S&P 500, 79% with Bitcoin. Looking short-term daily data points, 48% with S&P 500 and 85% with Bitcoin. Let's look at ETH a bit here. Almost going, like, is it active? Yes, it is active. So you can buy ETH if you want to get into the cryptos. But yeah, what is going to have the biggest effect on Ethereum is, of course, Bitcoin. So here's the chart for Bitcoin. Actually, a much stronger breakout than we saw from Ethereum. Bitcoin had its big breakout here in October, actually. So this is a big move, though, for Bitcoin. RSI is a bit stretched here. I mean, this is an RSI of 78. It's not at the extreme end of the spectrum, but it's definitively is at the let's be a bit cautious end of the spectrum. Dailies, yeah, recently seen some pullback here in the RSI, notwithstanding the latest push. So we did have a bit of a cooldown period before the push. Yeah, but Bitcoin is a bit getting a bit excessive here, a bit hot. The seasonality is rather similar to what we saw with Ethereum here in the table view. Yes. Okay, so let's now compare Ethereum with Bitcoin. So ETH USD / Bitcoin USD. Yeah, let's actually make a choice with this one as well. Coinbase. Yes. Okay. So this is the relationship between these two cryptos. Might be time cycles afoot. Yeah, not super clean, but something around here, suggesting that Ethereum could be in a rising, in a period where it outperforms Bitcoin, and that would also make sense given the rather excessive move, maybe, we have seen from Bitcoin. So let's go here to the dailies. Yeah, I mean, looking here at the bottom, something support-ish as well. You know, if you draw that in, let me just get the tool. So around here, okay, that's red, but there's something supportish happening at that territory. Let's look at the seasonality. The seasonality is definitively favoring Ethereum here over the last 5 years in green, 7 years in blue. Looking at December, we have a tendency to see an overall loss for December. That is, you know, due to it usually is a bit choppy, as you can see. So rise here in fall during the beginning of December, then a rise, then a fall, and then then a rise. So it's noisy, but the overall trend here into January is favorable to Ethereum. Okay, so that certainly strengthens the case here for Ethereum. So when it comes to relative performance, I think this warrants a 4. This is pretty interesting. So we do have 1.7 overall in favor of the bulls. We are slightly overbought. So that's it's a bit of an issue. I'm not a huge fan of the big move from Bitcoin because, you know, there's a risk of a pullback. So I do think that it's relatively prudent here to tighten stops. The great thing now is that you have the ability to trade both Bitcoin and Ethereum using ETFs. The great thing about ETFs is that there's many zero commissions platforms where you can trade them. So there's literally no commissions. When you buy the real stuff, there is transaction costs and and also tax reporting is more messy. So yeah, I do actually prefer myself to buy these things using ETFs because it looks better, you know, when you have like a big, like if you have like a statement from interactive brokers that you attach to your tax report, it looks a lot better than if it's some crypto exchange. It's just the way it is. Broadly, when it comes to cryptocurrencies, I view them primarily as an investment. I have basically lost the hope that this will become an alternative to the monetary system. We just do not see that trend. There's been all the talk about, you know, cryptocurrencies being an alternative to the financial system, blah, 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 but it doesn't happen. We haven't seen any major e-commerce stores, financial institutions, streaming services, you name it, really embrace this market and really sort of make it the only way to actually do commerce on the platform. But yeah, it is the way it is. It is primarily an investment. The technology is very interesting, but yeah, as I said, I just don't see this ever becoming something that could replace the current monetary system in time, because the dollar and the euro, there are already blockchain-ish, well, there are blockchain projects related to them all. So the window of opportunity that's been around since way back, you know, you have to go back to 2007. So there's been many years now where the cryptos really had the big window of opportunity, but it's now gone. Another thing to be aware of is actually artificial intelligence. So there's been a lot of talk now about projects, models in OpenAI that are extremely good at math. So they are good at math in the same way that GPT is really good at text. So currently, GPT is better at writing than any author that's ever lived. And that is when you compare it to especially the speed, because when you use GPT, it just quickly gives you a result, but there are internal models for OpenAI where they can have GPT review its own writings from different perspectives and so on and so forth, and really improve it even further. So if you were to have a competition between like Stephen King, J.K. Rowling, and GPT, and they have the same amount of time to write a chapter, I think GPT would win. What is a big deal for cryptocurrencies is encryption. So given that AI is now becoming really good at mathematics, it means that there's actually a very high probability that AI, when given enough compute, will be able to do math that is simply beyond human ability. Similar to how it's even beyond the writing ability of Stephen King to write one really good draft for a paper horror novel in 30 seconds. GPT can do that. 30 seconds, no problem. Stephen King can't do it. J.K. Rowling cannot write in 30 seconds a really good first draft for some fantasy masterpiece. Just not happening. GPT can do it. I do think AI will be fully able to break all the encryption known to man. That completely includes cryptocurrencies, which, given our current understanding of math, okay, it seems like it's not able to break it, but I do think the incentives as well, from the military-industrial complex to develop AI that can break all kinds of encryption is extremely high. So yes, I do think that it will happen sometime in the future, and that could lead to a complete collapse of the cryptocurrency industry. And that would also be something that the big powers that be would be very happy to see as well. So something to consider, and the reason to be a bit extra cautious, at least longer term, when it comes to cryptos.